Today we are breaking down everything you need to know about insurance fraud for the National Life Insurance Exam. This is a critical section of the test because it touches on ethics, state laws, and contract validity. We start with the core definition of fraud, which requires 3 elements, including a false statement, the intent to deceive, and the reliance of the other party on that false information. On your exam, application fraud is the most frequent scenario. This is often labeled as material misrepresentation. The examiners will present you with a situation where an applicant intentionally provides false information, such as claiming they are a non-smoker when they actually smoke 2 packs a day. The key exam takeaway here is that the insurer can prove that this information was material to the risk, meaning they would have charged a higher premium or denied coverage entirely, they have grounds to void the contract. This ties directly into the incontestability clause, but remember that in many jurisdictions, proven fraud can sometimes bypass that 2-year limit, although you should check your specific state laws for that nuance. Next, let us discuss agent-level fraud, because this is where the terminology gets tricky. You must be able to distinguish between misappropriation, twisting, and churning. Misappropriation is the legal term for when an agent fails to remit premiums to the insurer. If you take a client's cash and use it for your own car payment, that is misappropriation. Now, pay close attention to the difference between twisting and churning. These are favorite topics for test writers. Twisting occurs when an agent uses misrepresentation or incomplete comparisons to persuade a policyholder to lapse or surrender an existing policy in order to buy a new one from a different insurer. Churning, on the other hand, is the practice of replacing an existing policy with a new one within the same company, usually for the sole purpose of generating more commission without providing a tangible benefit to the insured. A great way to keep these straight for exam day is the mnemonic that twisting involves 2 different companies, while churning stays in the same circle. Moving on to claims fraud, this involves the submission of false or exaggerated information to obtain a benefit. Examples include faking a death or claiming a higher loss than actually occurred. The exam will often ask about the role of the State Insurance Fraud Bureau. You should know that these bureaus are specifically designed to investigate these cases, and that insurance companies are generally required by law to report any suspected fraudulent activity within a specific time frame, often 30 days. Failure to report can lead to administrative penalties for the company. You should also be aware of premium fraud. This can happen on the policyholder side, such as providing false information about a business's operations to get lower rates, or on the agent side through various schemes. When you see a question about penalties, remember that insurance fraud is a serious crime. Depending on the severity and the amount of money involved, it can be classified as a felony. The exam may ask about the specific consequences, which often include hefty fines, the revocation of your insurance license, and potential imprisonment. One major trap on the exam is the distinction between a representation and a warranty. Most statements made by an applicant on a life insurance application are considered representations and not warranties. A representation is a statement believed to be true to the best of one's knowledge. Fraud only occurs if those representations are intentionally false and material. If a question asks whether a client is guilty of fraud for accidentally misstating their zip code, the answer is usually no, because there was no intent to deceive and the information is not material to the life insurance risk. Focus on the word intent. Without intent, it is hard for a prosecutor or an insurance department to prove fraud. Always look for the word material when evaluating application questions, as it is the bridge between a simple mistake and a fraudulent act that voids a policy.